Look, we need money, we need inflow.
Okay, so would the demutualization actually help in
a different argument entirely?
No, so if I could, if I could add something to the old money issue, you see, old money, you have to take it in the context of the economy.
All right.
There are some investments that are called irreversible investments. You brought in money into the country to build a factory, right? If you're taking money back the next day, the factory is there. Right? Exactly. So you must look at that's where the fiscal policy and the monetary policy, the convergence have to be, and the government will have to look at the entire economy. If, for instance, there were a lot of old money coming to Nigeria, the old money is for a purpose. One is not for corruption, one is done for money laundering. I don't see how it's going to hurt the economy. Once the key issue now is for the investment bankers, for the operators, and for the regulators to ensure that this money is now being used for proper utilization of developing the economy, e.g., factory expansion and all similar kind of things. So if that is what the old money is coming in to do, then it becomes okay. But if it's to fund corruption, money laundering, that's why it is.
Okay, so
just a little thing. Yeah. If you look at it really, let's go back to the power sector example again. The money required, most of the funding came from outside. Maybe the banks were able to, the local banks, and they did quite a lot of job, maybe about 30 to 40 in some cases in terms of the financing we did it. But most of them also had to go get funding outside in the first place as well. So if you extend it further, there's also the problem of mobilization. You know, the argument by CBN of financial inclusion, getting the funds. They do not have so much money available themselves enough to even expand credits. So they can only go for these big ticket deals, which they cannot fully fund themselves. So at any point in time, to grow this economy, we need...
You always have to go back to the capital market. Yeah. Now, is enough being done by the government and the regulators to strengthen local participation in the market? Because we noticed that in the result recently released by the analysis of transactions on the Nigerian Stock Exchange between January and August, we had more of foreign inflows than domestic.
If that, I would say it's is due to what I call snake bite effect. Right, a lot of people in the Nigerian economy got their fingers burnt in 2008, and they are still suffering from that psychological impact of snake bite effect. You know, if a snake bites you, if you see an earthworm, you definitely take a run. But the foreign investors are more savvy. They are able to look at and take the past for the past and look at the present opportunities. So that's where they are coming in. But my own take is that for us operators, for the regulators, we must stop doing things the same way they were being done in the last time. For the foreign investors that are coming to the market, most of them pay very, very reduced, very, very low transaction cost to come into the market. So they're able to see profitability at a very early stage. Right. So the same thing we need to do for the retail investors. So that to bring them back to the market, let them have confidence, let them try the trades, let them see that there is actually liquidity. Then gradually you get them back.
Right. So Femi, do you also take this line of argument?
The question, I believe, dovetails from the last argument about hot money. If you look at the history and the composition, the structure of the Nigerian capital market in terms of foreign investors broken down to institutional investors and basically institutional investors and the local and foreign, and then you look at the retail end of the market, prior to 2006, it's always been skewed the other way. After 2006, with the influx of people who came in for a myriad of reasons, the same way they came in, they went out. And so if you look at the table over the period between pre-2006, 2006, 2007 till 2013, you see that the readjustment in terms of those who would naturally invest and stay in there. And then when you talk about this foreign related, you have to also look at the components of what you call the foreign investors. You got pension funds, you got venture funds, you got other funds outside the country focused on emerging markets.
You have retail investors also.
Who they go in there. What the argument is this? We cannot, the argument has been made, and I subscribe to this. We cannot build that market we seek we all desire, strictly based on that mix of a 70-30 foreign local participation. Now, Ayoleke has explained why you have a problem with the retail market. The second side of it is that the dynamics have not changed. Some raise the argument that people do not have disposable income. Well, you never have disposable income to do investment anyway, so that's no argument. You have to make a conscious effort to want to invest. But you haven't given incentives at that level for the retail market. And I think the NS is doing one or two things in terms of creating ease and access for them to trade. But they're still the same bottlenecks. Like he mentioned the issue of a transaction cost. If I'm still going to pay 1.35% in and out, right? And I see someone trying to give me 0.25 in and out, I'll probably go for that. If I get someone who can make life easier for me in terms of my transaction, I'll go for that. If I get someone that can allow me to do my trade online, I go for that. Okay,
so now with the introduction of the XGen, is also going to...
It's going to assist, yeah.
It's going to assist. So you can see that the building blocks are coming. So sometimes when we have this conversation and we mention some problem, it's not so much that we're taking a knock. It might be helpful if we have something like a map that can show us the guide, so that we can all know that, yes, we are not there, but we how do I put it? We're going the right way. So one of those right ways we should be going is to go back to what the Minister of Finance had proposed before. We take a look at our stamp duties, we take a look at those charges that go in there, and we drop significantly the cost of transaction in order to increase volume.
And velocity.
And velocity.
Velocity is the key.
And so then we can then trigger. Then when you do that, you trigger off momentum.
And that's where the primary market would come back. If there's no momentum in the secondary market, the primary market can never come back. Right? So the secondary market builds the confidence. You see, the velocity goes in there, the volume goes in there, the liquidity comes in. People have a misconception. When they talk about liquidity, they always think that is the bank will give you money. No. Liquidity in the capital market means I want to sell my share, I find someone that can buy. I want to buy shares, I have someone that want to sell. See, and that, when you have a lot of people coming into the market trading, the velocity is there, that's when the liquidity comes in. And by the time that comes in, it dovetails or cascades into the primary market. Then you now start seeing new issuances.
Right.
Then a lot of other things start happening. And that's why if you don't have new issuances, domestic new issuances, definitely no foreign company will come and do a cross-border listing into your economy.
So, let's wrap this conversation up, gentlemen. We're fast spent with time. It is an achievable plan. Doesn't get in this $1 trillion market capitalization, and when we get it, when we eventually get to that line, how can it be sustained?
Yeah, the exchange has a new department, which I quite very like. It's called it's like market development and retention, because you don't only win a customer, you must also look at ways of sustaining them. You see, and retaining them it's not only with the Nigerian Stock Exchange. We have to realize that the capital market goes beyond the stock exchange. It's the entire economy. There must be incentives that would be there to ensure that people or issuers want to remain listed. The benefits are there. They're able to raise money at cheaper cost. Their investors can find liquidity for their investment at very low cost. And the market itself must be comparable with other international markets. We must benchmark ourselves. Right. It's a very global economy.
Sorry to go. Femi, closing.
Last thoughts. Yeah. Not by 2016, but we will be building blocks, and hopefully you'll call us back to review. It's been an interesting conversation, but definitely we will need to have to see some foundational blocks to actually trigger most of this thing. But in the midterm, we can move rapidly if we can get some 3 or 4 key sectors in place, and we need government to come up with policies and incentives to help these companies see the business case for them, because they're not in this business for charity as well.
Well, thank you so much, Femi and Ayoleke. Thank you so much for joining me on the program today. It's been an interesting conversation. Do have a profitable trading day.
Yeah, thank you very much.
Thank you.
Well, I've been speaking with the Managing Director and Chief Executive Officer of Prussia Nigeria Limited, Femi Awoyemi, and Ayoleke Adu, the Managing Director and CEO of Morgan Capital Limited. And we've been looking at possibly achieving the $1 trillion market capitalization, which the Nigerian Stock Exchange and the Securities and Exchange have actually put forward. The case seems like it's airtight, but then they've also raised a couple of issues that need to be looked into. And these issues, we hope the government and regulators will actually turn their eye on. But that's the program for today. Thank you so much for watching. I'm Harriet Agbing.